Hey guys, welcome back. Today we're going to be jumping in and having a look at MOHNISH PABRAI'S latest investment in Japan. I'm over on Ticker Terminal here, which is a great place to look if you're trying to get a gauge on some investment gurus and what's in their current portfolio. And this also covers equities that are outside of the US, not just equities in the US as well, which is a great asset to have on Ticker. So let's scroll down and have a look at the bottom here. This is his latest acquisition in a company called Shinoken Group, which is a Japanese company, and their ticker code is 8909. So we're just going to have a quick look over some of the financials of this and try and get a gauge on why MOHNISH has made this investment. I've been looking over this the last couple of weeks. Brad Kellner, another YouTuber at Stock Compounders, released a video about 3 weeks back now from memory, going over some of the basics around this as well. So I've just sort of been digging a bit onto that as well over the last few weeks. There's some great information out there over on the corner of Fairfax and Berkshire. I've got a nice 3 pages on the forum there about it, which we might dig into that a little bit later on as well. But today we're just going to be looking over, try and find some of the key things to why MOHNISH has made this latest investment. So we can see here it's currently 5.66% of his current portfolio coming, and he's got just over 2 million shares with the company, and this is as of 28th of January 21, and this is through the Japan 5% filing there. If you've watched any of my videos, you know I'm a big fan of MOHNISH, and he's been doing a lot of videos recently about trying to find these particular companies that are spawners. So they're always spawning out new businesses and have good long runways ahead of them, sort of thing. So I think this is what he's thinking this is, and it has a current low market cap of just below 400 million. So let's just have a quick look at a couple of different things here. We're still on Ticker here, and then we're going to jump into Simply Wall Street, have a look over some of the key numbers there, just to get a bit of a gauge on why we think MOHNISH may have made this investment. So we just have a quick snapshot here of the last 5 years. Looking over the return on assets, all look pretty solid. A little bit lower than what I'd like to see, but not too bad. Return on capital is great. Return on equity is also very good. So not too bad there. Let's jump over to Simply Wall Street here. There's a great snapshot as well, guys, over here. Gives you good, easy to digest the numbers. They have everything in nice, easy graphs, like I've shown in a couple of videos before. Basically, just a quick overview on Shinoken. So they're sort of like a real estate investment trust, but they also, a bit more than that as well, they also construction side of the business and also management, and they're also starting to branch out into Indonesia, which given the only license to operate in Indonesia as well. And they also have a couple other little sectors as well here, where they're getting into energy, which is power, obviously, and all that sort of thing in Japan, which is super expensive. I do have a bit of a background in Japan. I have spent a fair bit of time in Japan with our business, so I do have a basic understanding of Japanese business. So they also have the construction side of business, then they're renting it, so there's that recurring revenues, which MOHNISH PABRAI likes to see. So their current PE ratio is 6.3. So very low PE ratio, price to earnings ratio. I think this is one of the attractions for MOHNISH, is the low PE ratio. Well, currently low PE ratio compared to below the JP market of 17.1. So very cheap regards to its earnings. Let's just jump down and have a quick look at some of these other things here. Just going to be scrolling over a lot of this, guys. I'm going to be leaving links and everything in the description below so you guys can do your own research around this. Maybe we can get a bit of conversation going on around, what you guys see with this particular company as well. I'm currently not a shareholder, but I have been sort of digging into it the last sort of few weeks. Simply Wall Street have got a couple of great articles here. I'm not going to be going over these articles, guys, but they're definitely worth a read if you're interested in learning a bit more. If there is enough interest in this company, I will probably make another follow-up video because I am quite interested in them at the moment, and I am doing a lot of research on them. So here we are, the PE ratio, guys, again, at 6.3. This is where they're sort of pegging the fair value. But like I've said in the past, I don't put a lot of stock into these fair value valuations of this, which is something I'm trying to get a gauge on at the moment, is the current valuation and what I'm happy to pay for this company. So there they are, PE ratio again, which is very good, very cheap. If you're comparing it to its earnings, price to book, so it's trading just below price to book, coming in at 0.9. Future growth, not much on that. Revenue history here, let's keep scrolling down. Return on equity, like we said, they're saying it's low. I think 14.3% is not too bad myself. Return on assets coming in at 7.2. Return on capital employed coming in at just shy of 15% there. Financial health, it's not too bad. They do have a bit of debt on the books, but it's not too bad. They manage it well. They still have a fair bit of cash on the books as well. Net cash, they have enough cash on the books to cover their debt. Debt to equity history analysis here. So we can see they have just a touch over 38 billion equity, and then 34 billion in debt currently. Actually, so if we fast over to December 31st, they have 32 billion in debt and 41 billion in, this is yen, remember guys, as well. When we're looking over this, it's a Japanese company, so bear that in mind. Like I said, they do have a bit of debt on the books, but they seem to be managing it quite well. They do have a dividend as well, currently around that 3.7%, but they're not paying out a lot of their current earnings, which is good. They're retaining a lot of these earnings, which is investing back into the business and growing these different sort of segments to within the business, which is what Mohnish talks about, these spawning, these businesses that have different sort of legs to them that keep spawning and growing. So this is the current payout to shareholders here, coming in at just over 20%. Which is giving them around 80% retained earnings, which they can further deploy into the business, which I'm happy to see. Let's keep scrolling down. Just scrolling through super quick today, guys. Board members. Another thing that I really like about this company is the ownership. Okay, so let's keep scrolling down through here. So the ownership breakdown. Individual insiders, 23% holding of individual insiders. Institutions own 34%, and general public owns just shy of 40% there. So the top shareholders here, we have Reiki Shinohara owning just shy of 20% of the company, and then Dalal Street coming in number 2 there, and that is MOHNISH PABRAI'S fund there. So he's the second biggest stakeholder within the company. Not too sure exactly when he first bought into the company, but that's where it stands there. So we're just going to have a quick look at the 6 different segments to Shinoken, which is one of the positives for the company, and which I think what Mohnish is seeing within this company as well as a potential spawner for different areas that the business can sort of spawn off into. So they have sort of 6 core parts of the business: the real estate sales, the real estate service, the general contractor, the energy, the life care, and then also expanding in overseas, which have only recently started expanding into Indonesia and such. So let's just scroll over some of this. I'm just going to be scrolling through super quick, guys, and we'll leave a link in the description below so you guys can jump in and do some research around this as well if you would like. Or if you'd like a follow-up video, drop that in the comments below and I'll do a more deeper look just at the different segments to the particular business that we're looking at today. There's a couple of things here I just want to point out to you guys as we're scrolling through this here. So just have a look at the different segments within the business. The business structure is what I want to look at. So they've been winning a few awards for their different apartments that they construct and then also sell on and also manage as well, which they lease out as part of the business that they offer. So this is the rental management side of the business here, which has been growing the last 3 years, we can see here, and also the guarantee of rent with overdue rate coming in at only 0.14%. Then the LPG power side of the business as well, all have been growing steadily over the last 3 years. This is the business structure here as well that we're looking at. Keep scrolling down through here. So what they're going to do is try and do exactly what they've been doing in Japan, but transition this over to Indonesia, which they're the only company that has permission to do what they're about to do in Indonesia. So I think this is a good area for growth for this particular company. And I think this is what Mohnish is seeing as a big positive for the company. But look, I'm only taking a guess at what some of the things that he sees with it. He did have a recent video about it where he sort of briefly touched on it. I'll leave a link to that in the description as well. Didn't say directly, but he said he's investing in a company in Japan that's under 400 million market cap, that's been around for about 30 odd years and good management in place and everything. So it's pretty clear that he's talking about Shinoken. There's no other business that he's been investing in recently, so you can sort of connect the dots there that he is talking about Shinoken. I'll leave a timestamp to where it is in the video as well, because it's about an hour and a half, the whole video, but it's well worth your time if you want to watch a bit of Mohnish. So let's just scroll down. This is something I want to sort of point out to you guys here. So profit increase year on year. And this is where they're sort of transitioning with their business, so they're not being so heavily reliant on real estate sales. So here in 2017, 77% was off the real estate sales. Now they're shifting to a more recurring business model besides real estate sales. So general contractor coming in at 13%, recurring business, real estate service, energy, life care at 39%, and then the real estate sales coming in at 48%. So if there was an upset in the market, let's say the housing market dropped back a bit, it's not going to affect their business as much. It still will affect profits and everything, but not as much. They're not so reliant on the sales of the property. Whereas back in 2017, they were pretty heavily reliant, and if there was a correction in the market, it could affect this company quite a lot. So that's one of the negatives, but I feel this is positive as they're transitioning away from that and trying to generate these recurring revenue streams through the management side of things and the energy and the healthcare side of things. which is a very good positive for the company, I feel. Like I said, guys, I'm going to leave a link to this in the description below if you guys want to jump in and check this out. Or if, like I said, if you want to see a full video just where we look at the different segments, then I'll make that as well. It's in the description below. This is the website for Shinoken, where you can get the latest financial report. And this is just a little message from the CEO, which is well with the read as well. Where he's just sort of talking about the effects of COVID and how that's affected the business and whatnot. The business did get knocked around a few years back. In 2018, there was a big scandal that broke out, which affected all these sort of companies. There was scandals around, the cooking the books a little bit on loan applications and things, which Shinoken was not, but they sort of got tarnished with the same brush, which has affected the share price a fair bit, and they've only just started to recover from there recently, and they're currently sort of trading around that sort of 1100 yen, give or take. Anyway, guys, we're going to wrap that one up there. Love to get to know your guys' thoughts on Shinoken. Where do you guys currently see it? Are you interested in this particular company? I have been sort of digging a little bit on it. There's also a couple of other great articles worth checking out. There is an article on here which I haven't been able to get access to because I'm not a member of Manual of Ideas, but I'd love to get to watch this. If anyone's watched this, let me know. Drop in the comments below what your thoughts were on the Manual of Ideas, because this was pitched as one of the best ideas for 2021. Also, this article here over on the corner of Berkshire and Fairfax has a good 3 pages on the forum here. Goes into a bit more detail, a lot about this, the pros and cons to it all. I'm not going to dive into it too much to you guys, but like I said, I'll leave a link in the description below if you guys want to jump in and have a quick look over some of that as well, and also a link in the description to the company website. And also this guy here, who was an investor with the company, there was some talk around that he may have sold out. I'm not too sure if that happened or not, but this is sort of where he pegs the value at it, around that sort of fair value of around that 2,400 to 2,500 yen per share. That's what I'm trying to do at the moment, is trying to get a gauge on what the actual intrinsic value of this business is and what am I prepared to pay for this business. Obviously Mohnish has been buying it, so he's pretty happy at that price, but I want to get it clear in my own head, what's the good intrinsic value for this business. So that's what I'm currently working on. If you guys would like to see another video on that, drop in the comments below and I'll do a follow-up video on that where I'm trying to get a gauge on the intrinsic value of this business. This is also a great article as well, guys, worth reading. I'm not going to read over it all today, but definitely worth your time if you're interested in this particular company. With that said, guys, we're going to wrap that one up there. If you've got any dramas with anything I covered off today, drop in the comments below and I'll do my best to help you out. If you enjoyed today's video, guys, it'd be much appreciated if you hit that like button. It helps me out a ton. And if you want to see some future videos like this, make sure you hit that subscribe button and you'll be the first to know when the next video drops. Alright, guys, take care and we'll see you in the next video.